Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, I'd like to say a big thank you to all our veterans. It's Veterans Day today in America, and we really appreciate your service to our country, and once again, thank you. Well, starting this Friday, the 11th of November, and we've had some mighty big stocks fall here. One of them is Amazon. Amazon's had a super ride. If we go back here to the beginning of the year, we're trading around about 450, 475. We went doubled. So it would not be surprising to see a pullback in this stock. So we're going to put our Fibonacci tool in here, which is right here. Click once, click on the very high, drag it to the very low, and you can see that could take Amazon really back to the 661, which is a 50% retracement, or even all the way to 61% retracement, which is 616. Is it going to happen? Not sure. But the idea is all of our trade triangles, we put those in, they're all negative right now on Amazon, indicating that the trend is down. We're very heavily oversold. We could see a bounce from here, but the general trend in this market, at least for the time being, is on the downside. So if we go closer in, let's take the last 6 months, and we can just get an idea of where this market has been. It looks like it's making a large, or has made a rather large sort of rounding top right here. And that is not necessarily a good sign. If we even go closer in and inspect why this happened, we could take a look at, let's say, the last 3 months. And you can see this is not a good sign right here. This is called a negative engulfing line, when this particular bar engulfs the entire previous bar, the body of the bar, and then the next day we close lower or down. So this is not a good sign, especially on the weekly. So this is where we put our weeklies in, and you can see we had a monthly right here, and we see that the weekly, let's scope this out just a little bit further, and you can see the weekly came in right here at 803.10, and we're currently trading at 742. So it's, again, the trend really kind of became very suspect when we went below the $800 level. So we're very heavily oversold, which means we could get a bounce here, and maybe a good time to be looking at Amazon sometime in the future. This particular moment, it is not such a great way to jump in front of this truck, and I think that's really what it boils down to, is that we're seeing this market really be on the defensive. And this monthly signal that came in on the 10th yesterday was really let's say, the straw that broke the camel's back. So let's move on to our next mighty stock, and that's going to be Google, or Alphabet as it's now called. I think you'd have to say that Alphabet, or Google, has been a little bit of a disappointment. You look where we closed last year, which is right around these levels right here. If you just draw a straight line across there, we're pretty much flat or even down for the year. And we've had some big swings, really big swings. Now, can we swing back down to the 660 level? That's very possible. We are below the 50 level on the RSI, which is an indication of a trend that's lower. And also, if we put our, let's just clear the screen, and if we put our trade triangles on here, you can see that we're pretty much negative on all counts. So it's minus 100, strong downtrend. The big thing to watch, I think, today is if we close below this level right here, the lows we saw just a couple of days ago, and they came in at $750.56. So we're just $7 above that. I would say if we close this below 750, this is not going to be a good sign for Alphabet. Let's take a look at the big winner this week, and that's, of course, the Dow, which is up dramatically because of the Trump victory. What else can I say? The trend is up. All of our trade triangles are positive, and we are looking at this market to go high. This is new highs, and if we look at this, because this happened in the same month, it hasn't registered yet, but this is now a green trade triangle, and it looks like the trend is up. I'm not so convinced, but that's another story. So the reason I'm not so convinced is because looking at the other indices, the S&P 500 and the Nasdaq, they're not saying the same picture. So let's take a look at those right now. This is the Nasdaq. As you can see, this clearly we still have a very strong top in place here, and our trade triangles, the weekly and the daily, are still negative. You can see here's the sort of thing that we're looking at right now, and we sort of have, we talked about this before, we have this negative divergence. We're making new highs here, but we're not making new highs on the RSI indicator. So I'd be a little bit suspect. As I said, we had two trade triangles down, the monthly and the weekly. indicating a longer-term downtrend, and I think that's the one I'd like to go to. This is a much more representative of the real market, the Nasdaq, as opposed to just 30 stocks in the Dow. So let's take a look at the S&P 500 next. Again, a somewhat mixed picture. We sort of stopped dead where we should have stopped, and we're over the 50 line, which is a good sign, but our trade triangles are mixed. You can see that our weekly and the monthly are in conflict, which means you should be on the sidelines in this market for the moment. So I think that's the best place to be. Now let's take a look at crude oil and also in gold. We talked about this last week or earlier in the week. We talked about the possible cyclic low period, but again, one has to be careful because of where we are right now. We're at the low end of this trading range, and I would not be surprised to see some sort of a bounce. But what we're seeing now is a conflict between our monthly and weekly, but both the weekly and the daily are down, indicating you should be short this market, and we'll have to let it see how it plays out next week. But again, very oversold on the RSI, and every time we've gotten down here, it's been some sort of a reversal. So let's pay close attention to that coming next week. Gold has been extremely volatile this week. You can see we trade up as high as $13.40 now. We're trading at $12.34, almost $106 range in just a period of 3 days. All of our trade triangles, the weekly and the monthly, are our trade triangles, the weekly and the daily, and the monthly are all negative right now. So again, it says the trend is down, and if we go further out, scope this out, we'd have to see support comes in right around these levels. I would say right around the 1210 level, 1200 level, but that's the next level where we should find support here. But again, we're very heavily oversold. Possible divergence coming in on the RSI. So again, be careful with this market. We've taken a lot of time today on these things, but we think it's an important time because of the change in the direction of the country. And whether that proves to be positive or negative, we'll have to see. But thank you so much for your time. Thank you to our vets again. We really appreciate what you've done for the country. And have a great weekend, everybody. I'll see you next week. Thanks for watching.